It was a sort of a muddled message from the White House, no doubt. I mean, taking a step back, we were a little bit surprised by the market reaction insofar as it was related to trade, in that the White House had actually really clearly telegraphed these investment restrictions were coming on China. They had announced it on March 22nd, their intention of imposing investment restrictions, and then on May 29th, they actually specified a time frame. So in some ways, the market should have known that these were coming. June 30th was the set deadline. But I think, the overall message here is that the Trump administration is serious on trade, and particularly on China. And Bob Lighthizer, President Trump's U.S. trade representative, has been very consistent on this. And I think that, it's the focus of this, the focus on China, is not surprising.
So you're not of the school of thought that says there's multiple camps, and you might hear from Lighthizer Navarro one day and Mnuchin Kudlow another day. I mean, that's where the confusion is.
Yeah, of course. And I think I think it's really important to parse out these trade issues. There is China, I think there's a lot of unanimity in the White House and in Congress that China has been a bad actor, and there's political will to see that rectified. And then there are all these other trade issues. And so I think the division that you're alluding to, Carl, is on those other trade issues. It's on the aluminum and steel tariffs. It's certainly on the auto potential tariffs. But on China, there's a lot of agreement on China, and now they might sort of disagree about the tactics, but in terms of actually hold China accountable for their trade practices, there's a lot of, I think, political will in Washington.
So, Jack, what does an investor make of all that?
Well, I think the market investors looked at the rhetoric yesterday and said Trump and company blinked. They are paying attention to the stock market. They don't want to see necessarily a tailspin as a result of their policies. They are trying to clarify. Unfortunately, as Libby mentioned, there's just four different voices, and it's hard to reconcile all four of them into one policy. I think the bottom line is China, technology, and intellectual property. And unfortunately right now, steel, soybeans, autos are sort of just the collateral damage, hoping to get, protect intellectual property here at home.
Hang on, Jack. So is what you're saying that you think that this administration actually doesn't have a high tolerance for a lower stock market, and that's why they sent Peter Navarro out just ahead of the closing bell to walk back some of the worst of the investment restrictions that have been outlined in the papers, and that they're not going to go so far to let the market fall?
I think so. I think this administration is looking at the stock market as a barometer of their success. And while I do think that they do want to push these trade policies, they don't want to also, put the stock market at huge risk. That said, for every 1 percentage point the U.S. markets are down, China's down 4 or 5% because, our exports to China are about 1/4 our imports from China. So I think that they are feeling the effects more than we are, and it's really just a game of chicken. We'll see who blinks. And it seemed to me yesterday that part of that administration blinked.